In this video I will attack a few different points that might be blocking your trading performance. These are usually small details in a trader's behavior that prevent him from employing what he knows in the market every day. A few of these problems have their origin rooted in bad habits that traders acquire over the years, and it can be really annoying trying to get rid of this sort of thing. Let's take a deeper look into these problems. The first and probably the most annoying silent killer of the markets is something called procrastination, which is the avoidance of a task that needs to be accomplished. The task here is trading, but we have to ask ourselves why some traders avoid trading. There are deep psychological roots to this problem. Procrastination usually happens when the trader has been hurt a few times in the market. This creates a few bad memories that are immediately triggered when the trader thinks about getting in front of the chart. This is obviously a problem because if you cannot get in front of a chart to actually trade, all you are going to do is delay your progress. The bad experiences that generate these bad memories and a state of cognitive discomfort in trading are usually the byproduct of unprofessional and poor quality trading principles. The antidote to procrastination is the gradual change of habit. Pay attention because the keyword here is gradual, not the change of habit itself. If you cannot even get in front of the computer to trade because you procrastinate all the time, you must establish a very small and achievable goal that will start to change this behavior in you. As a parenthesis, notice that this pattern of behavior is more real than you might think. When you develop a habit, you actually change the microstructure of your brain. That means that when you think about trying to trade, the brain circuit involved in procrastination will be immediately triggered, and that's something that is outside of your control, especially if you try to change it too quickly. In fact, trying to change a behavior pattern like this too quickly creates a backfire effect. In other words, if you create an ambitious plan to get rid of your procrastination overnight, the end result will be the strengthening of the brain circuit involved in procrastination, which is the exact opposite of what you want. This is why I said that the key to changing a habit is the gradual exposure to the new habit you want to develop. You have to do this by creating small and achievable goals. For example, let's say that you keep telling yourself that you will trade for 8 hours the next day. That's a huge leap because you have been trading 0 hours per day, so just the mental picture of trying to do that will tire you the next day, and you will not even begin your ambitious plan. However, if you create a plan to trade for an hour, it will be much easier to achieve. Let's say that you keep achieving success with your plan of trading 1 hour every day for a week. At this point you will have successfully changed your brain physiology a little bit to the side you want. When you get used to your new acquired habit, you can create a new goal or set point. For example, you can now have the goal of trading for 2 hours. Since you were used to trading 1 hour already, trading for 2 will not be that much of a stretch. However, if you started with the goal of trading 2 hours a day right from the start, it would be a lot more difficult, and perhaps impossible to achieve in the beginning. One important thing here also is that you cannot put too many constraints in your performance while you are remodeling your habits. First you remodel the habit. Once you have the habit under control, then you can start worrying about win rates, performance, and things like that. In my experience, this is the only way of successfully changing an annoying habit like procrastination. This plan serves for anything in your life, by the way. The reason this gradual implementation plan works is that it creates a positive feedback loop in your behavior, meaning that the more success you have, the more success you will obtain, but all of this has to start with a small degree of success. It cannot start with your desired degree of success because that's just unrealistic and against what we already know about how the brain works. The second thing that might be blocking your trade performance in a big way is hesitation. Many traders know how to analyze the charts well, but when the moment of pulling the trigger comes, they simply freeze and decide to wait for the next opportunity. This is related to some degree of procrastination as well because the trader is always delaying the moment in which he will have to assume some responsibility by taking risks. If you often find yourself in this sort of situation, you will need to change your behavior in the same way you would do in the case of procrastination. First you will need to choose a risk level that you can tolerate, and then you will gradually increase this level of risk as you become used to it. You cannot expect that someday you will wake up and the circuits in your brain that are related to hesitation will simply disappear. This is obviously based on the same positive feedback loop principle of the previous example. Your brain does not respond well to sudden changes. It responds well to subtle and gradual changes that don't seem too dramatic according to your own subjective judgment. There are evolutionary reasons to why your brain does this. You can see this sort of thing as a defense mechanism of the brain, and this actually happens in many different ways. Our brains are constantly trying to find patterns in reality, and it does grab onto these patterns because, for survival purposes, a bad plan is better than no plan at all. It's much easier for your brain to grab itself onto a bad idea than to not have any idea at all. This is simply how our brains evolved over huge amounts of time. It's certainly counterintuitive nowadays, but there are ways we can attack this problem effectively. The key here once again is the size of the incremental goals you will start to employ. The smaller the goals, the easier it is for you to change your behavior, but the longer it takes for you to achieve the final goal. Let me make an analogy to a person who is trying to read a book, but it is constantly failing. This person understands the power and the value of reading, and because of that, she will attempt to read as much as she can. The initial goal is too ambitious, and it's not carefully limited, and that's a major issue because the person will get overwhelmed thinking how much she can read every day. This mental process will leave her tired, and she will not read as much as she could, or she will not be reading at all. The result is that as weeks go by, this person only reads a few pages. However, if she had a reliable and realistic goal, things could take a completely different form. Let's say that a dense and complicated book has 350 pages, and a person intends to read that in a week. Instead of trying to read as much as she can every day, she must establish an achievable goal that when fulfilled will please the reward centers of the brain, and it will make the achievement of the next goal much easier. To read a 350-page book in 1 week, you need to read 50 pages per day consistently. That's not exactly easy, but it's not too difficult either, and it's certainly achievable. It's a lot better than trying to read 100 pages in 1 day, and then failing to read even 10 per day for the rest of the week. Another key here is the fact that you succeed at small goals. It's not the small goal itself. It's the fact that you succeed at it repeatedly. This produces an enormous positive effect in the brain that will stimulate yourself to pursue that same goal again the next day. Hopefully that analogy makes sense to you, and if you think about it, you can apply it to anything in your life. The third thing that might block your trading performance is the amount of risk you take. This is a common problem in the financial markets because people are always in a hurry to make as much money as they can in the shortest amount of time possible. This is understandable, but it goes against human nature, and traders who do this are basically shooting themselves in the foot. The problem here is that the gun is actually inside your head, and your foot will not hurt right away, which makes things more difficult to solve. What I mean with all of this is that when you increase the level of risk you take too much, you will amplify your emotions automatically, and that includes the part of your brain that is always looking to survive, not to thrive, which are two very different things. As soon as you take a risk that is greater than the subjective threshold that you establish automatically, your brain enters in survival mode. As I said in previous videos and course lectures, this is similar to waking up the primitive ape inside our minds, and this ape is a really bad trader. When I say bad, I'm being very polite of course. This sort of thing will make you reactive instead of proactive, and since your brain did not evolve to trade, the end result will always be failure eventually. The key here is choosing a risk level that is slightly uncomfortable, but not too much. This will put you in a state where your rationality will trump your emotions most of the time, and you will be able to keep yourself in that game for as long as you wish. That's called sacrifice, which is when you exchange the well-being of the present for the well-being of the future. If you are taking too much risk, the opposite is true. You will be making money in the short term, and therefore, you will be exchanging your future well-being for your present well-being. This is simply not a good idea by definition because that unfortunate future will eventually arrive, and then things will go south very quickly. These are three large problems that everybody needs to attack sooner or later in their trading career, so I want to give you a step-by-step instruction of what to do to start changing this in your life right away. Step number 1 is identifying the problem. You have to be honest with yourself here and write down what is the thing that is stopping you from doing what you want as far as trading goes. It can be procrastination. It can be hesitation. It can be too much risk, or it can be a wicked combination of all three. Try to write down exactly what happens to you. Step number 2 is to create the plan for your positive feedback loop, which is what will actually change your brain structure, and therefore, your behavior. Here is where you must define a starting point, a finish line, and most importantly, the gradual steps that you will need to make to go from the starting point to the finish line. Remember that is not the size of the goal that matters. It's the fact that you will be achieving that goal successfully on a daily basis. Step 3 is to sacrifice your present self for your future self in a balanced way. This means that you have to do things that are slightly uncomfortable to you right now instead of creating a plan to deal with a very uncomfortable thing in the future. If you do all these 3 steps successfully, I guarantee you that your trading will change dramatically. If you enjoyed this video, don't forget to click the like button, subscribe to the channel, and leave your feedback in the comment section. Thank you for watching, and I hope to see you in the next video.